We still find really good deals to invest in here in Austin, Texas. Today I'm going to cover 3 duplexes we just bought. And I'm going to walk through the numbers with you. I'm going to walk through how we found the deal, how we negotiated it, how we ended up finding 2 other duplexes on top of the one we already had under contract, how we structured the financing to take the deal down, and how we are improving the property and raising rents to make this deal pretty much 100 times better than it was when we bought it. So we'll get started here in just a few minutes. We got viewers?
Not yet.
No viewers?
Not yet.
Let me know if you can see all this.
Yeah.
It's too small.
No, you can see it perfect.
See it?
Yeah. Red Wing duplexes.
All right, can y'all get a calculator out?
Yep, we got a viewer.
Can you get a calculator out?
Yes, we do. I have one now.
All right, divide 1,150,000 divided by 3.
383,000.
383.
383,333.333.
That's good. Okay, can y'all look up the please? Can you look up the property taxes on the Williamson County Appraisal District for 2000/2002 Red Wing, 2004/2006 Red Wing, and then 2041/2043 Red Wing.
What was the first one?
2000/2002. All right. Found one duplex on Red Wing via off-market seller, one of our agents. Chris Sweeney found it. He initially wanted to wholesale it. He was. Can you guys hear me better? All right. Cool. So we have one of our agents, Chris Sweeney. He initially found a duplex on Red Wing Way here in Round Rock, Texas. It's a street full of duplexes. And he was doing some outreach to off-market sellers, found this guy who had a duplex. Chris had just helped his client buy a duplex across the street. And so now he was just farming this street of duplexes to see if he could find any other sellers who wanted to sell. Here in Round Rock, a duplex, the minimum right now I think you're going to find one for is about $450,000. And what's special about the duplexes that we bought is they were all 3-2s, 3-bedroom, 2-bath. So really, really big duplexes. And he got this seller to agree to sell him the duplex that he contacted him on, I think for about $385,000. This duplex needed a ton of work. One of the, they haven't been updated in a long time. The tenants have been living there for 10 years, give or take. And it needed a lot of work. There was issues with, roofing, leaks, all these other things. The roof had been replaced, a year ago. A lot of deferred maintenance on this property. But still, even at $385,000 with all the deferred maintenance, this was going to be a really good deal. So Chris brought it to us, and he had it under contract. And he wanted to see about wholesaling it. So we went and viewed the property with him, went and talked to the tenants, learned a little bit more about the units and all the deferred maintenance and any issues that they were experiencing. And what we ended up doing was after we viewed the units, we set up a meeting with the seller. And at this, I think it was a phone call actually. Matt and Chris called the seller to discuss, the condition of the property. And on this phone call, they discovered that he owned two others on the same street, two other duplexes, one right next door, and then one all the way at the end of the street. And they were all 3.2s. These units were rented out for about, let's see here, current rent. They were rented anywhere from about $1,100 to $1,300, which is pretty far below market value, market rents right now. But tenants had been there for a long time, and there was a ton of deferred maintenance. So what is, it was bringing in approximately $6,600 a month, give or take. And we found out that he owned two other duplexes on the same street, and he also owned a lot of other rental properties. So we tried to see if he'd be interested in selling the whole portfolio. He was not, but he was willing to sell all the duplexes on the same street. He wanted to sell them for about $400 each, so $1.2 million. And what did we do? I think we set up a meeting with him. So we set up a meeting with him, and we discussed the purchase of all three duplexes. We didn't want to pay $400 each, especially since he originally was under contract with us for the first one at $385. And these duplexes needed a ton of work. We started negotiating this sometime in January. And, his idea was, look, I can just put all the money into these, fix them up, and sell them on the market for about $420. But he didn't want to go through all that. He's building some properties in Georgetown, and he needed some cash to go ahead and finish those. And this is a much easier, quicker sale than going on market, paying, realtor commissions and all that stuff, rather than just selling directly to us. And so we negotiated with him, which has really been our $125K, and we negotiated a purchase price of $1,150,000, which brings us to about $383 per duplex. We were happy with that. We wanted to get it a little bit lower, but $383 per duplex was a good deal. These did need work, so we knew we were going to have to put money into them. But the seller financing was really valuable to us. We were able to put, about 10% down, which was really helpful. We were able to avoid origination points on a new loan, and we were able to structure a good interest rate for us. It does have a 3-year balloon, and there is a high prepayment penalty if we do sell or refinance the loan prior to this 3 years. However, we structured it to where we would at least be breaking even on rents. Our payments somewhere around like $4,700 a month. Payment. And a good comp that just sold on Red Wing. We closed on these about 2 weeks ago, and about 3 or 4 weeks ago, there was a duplex that sold on Red Wing Way, same street, for $515,000. Let's see if I can. So there's already a comp at $515,000. We're buying them at $383, but they do need some work. Then while we're under contract with the seller, anybody here who's local in the Round Rock area knows that there was a big tornado that came through about a month ago. And unfortunately, the tornado came right down Red Wing Way. It 2041/43 at the end of the street. That chimney was blown off the roof. There wasn't much other damage to that unit. 2006/2004. There wasn't much damage to that one either, other than some windows got blown out. What happened is these are on this one side of the street, and the tornado hit this other side of the street. So while these other duplexes on the other side of the street got hit very hard by this tornado, and the wind blew all this debris from across the street over to the duplexes that we bought. And so all this debris, shattered windows and other things. But 2004/2006, it had some shattered windows. The fence in the back got damaged. There was a couple of siding issues, some fascia, some gutters, little things like that. But not, we were very lucky, and the seller was very lucky. And the tenants and everybody in those units were very lucky that they did not get hit that hard by the tornado. The unit next door, shattered windows, same thing, siding issues, fence in the back. And this roof actually got blown off. Like half of the roof got taken off by the tornado. So this is while we're under contract. And this is unfortunate for us because now we're having to assume any of this, possible damage that we don't catch or the seller doesn't fix. Seller did not have insurance. He's owned these for a long time, free and clear. So he had to come out of pocket quite a bit to replace a new roof, fix all the siding, replace the windows, all the other things that were wrong with these duplexes after the tornado came through. And that was a little bit of a battle working through with the seller, trying to get him to, identify things that were actually caused by the tornado and get him to restore those to original condition before we closed on the property. And there were some things that got missed that we ended up inheriting after we bought these, but he did take care of a lot of the majority of the issues that were caused by the tornado. But anyways, after this tornado and just kind of the way these were managed for a long time, the tenants didn't really want to stay. So two of the tenants, their leases were ending May 1st. And they did not want to renew. They elected to move out. One of the after the tornado just up and left. That was 2006/2002. Both tenants moved out after their lease was renewing. So we inherited this property and we had 3 vacant units. 3, which we were not expecting. We were ideally going to continue to receive this rent, and we wanted to kind of take it, 1 unit at a time, renovating the units, getting higher rent, so on and so forth. But we had to inherit, 3 vacant units and all this problem that was caused by the tornado when we were under contract. Because typically when we buy properties and we have to do rehab to the properties, we get the rehab funded by the hard money lender. In this case, though, we were purchasing them via seller financing, and he was not going to finance our rehab. So we had to come out of pocket cash for all the rehab on the 3 vacant units. Luckily, one of the units was actually in really good condition. It had been updated a year prior, to an extent. So it had good flooring, it had good countertops, it had good cabinets, it had good vanities, good shower. And really all this unit needed was a good cleaning. There's a lot of dust and other debris and stuff left behind inside the unit, but we got that thing cleaned and back on the market. That one was rented out, I believe, for about that one was rented out, I believe, for about $1,300. And so what we did was we cleaned that unit, and it's currently on the market right now for $1,900. The other 2 units, they needed a tremendous amount of work. Really, they were in pretty bad condition. But what we did is we went in there and we put about 15 grand into each unit, which was unexpected. We really wanted to, like I mentioned, take it one piece at a time. And so now our rents are cut in half, right? So when we went under contract, we were going to be getting about $6,600 But now that 3 tenants moved out, we're looking at about 3,500, give or take, right? Then we've got a mortgage payment, we've got insurance, we've got this down payment, and we have to put 30 grand that we weren't expecting into these units that the tenants just moved out of to renovate them up. But it actually turned out to be a good thing. They needed the work, and we were able to get it done for fairly cheap, and they're in really good condition now. We went in there and completely updated everything, scraped popcorn ceilings. It didn't need new flooring. It had good tile in there, but new everything for the most part. Every single light fixture got replaced. All the vents got replaced. Showers and tubs got resurfaced. Got new vanities, new kitchen cabinets, new countertops, everything. Painted, fixed a bunch of sheetrock issues, new appliances, and so these units are now completely updated. And what the previous owner was renting out for $1,100 to $1,300, we're now going to rent these out for $1,900 to $2,000 a month for these 3-2 duplexes. So when all said and done, we'll be getting, when we renovate all units, right now we just got 3 with these raised rents, but as the other units come up for renewal, we'll be raising rents, and if they don't want to go with the rental increases, we will renovate the units and get market rents for them, and we'll be all in for about $12,000 a month, 6 duplexes, rented out for about $2,000 a month. We'll be bringing in about $12,000. So we're able to increase those rents by about 100% by coming in here, renovating the units, and raising rents. Can you tell me the property taxes for all those, please?
All right, look at this. Yeah, thanks. Well, we got 2000/2002 appraisals got it valued at $483,000. The tax rate is 2.09. They say not to use green for some reason. Doesn't calculate it. So let's see, 2% of 483,000. They used to. I think they took it off.
Just look at.
So last year they had it valued at 360,000. That's all right. I can do my calculator real quick. So 483 times 0.02. I should know that. Is that like 8,000, 9,000? 483 times 0.021. So $10,143.
For that unit?
Yeah.
All right, one sec. So insurance is about excuse me real quick. Where's my phone? How much?
10,143 for taxes. That's a lot. Craziness.
Yeah. So we're gonna be paying about, when all's said and done, about $2,500 a month in taxes.
So he's putting all of them together when he's saying that.
Yeah, for all 3 duplexes. What's management? 7% of 12,000.
My God.
840.
Andrew, you're supposed to be on the mental math.
What do you want to account for a vacancy?
Put probably half,
It's
2 weeks, so half a month.
for all?
Yeah.
Since we're doing it by month, I'm just going to break it down by month for vacancy. And then what about maintenance? What do you want to account for?
Usually I would factor maybe like 25%.
3,000 a month in maintenance?
Yeah, I mean, it's high, right? I mean, I guess it depends on what we're trying to do. Like, if we're being conservative, that's what I think. If I really thought, it'd be like
a realistic number so far, even with the new tenants.
500 a month.
Yeah, I'd say like we'll meet in the middle. Let's say 750.
Yeah.
So when we took these over, the previous owner did not do a great job maintaining these properties. So when new ownership took over and an actual management company stepped in, managed requests started flooding in, and they actually weren't that bad. Definitely not 2,500 a month, but even with this initial flood of maintenance requests, it actually wasn't that bad. So
just a tip on that, which is interesting. Whenever you buy a property and you're the new owner, the tenants a lot of times want to see what they can get away with because they don't know who they're operating and dealing with. And like the last owner seems like he didn't do anything. So it's not necessarily like, hey, we're required to do this. We want to do what's required by Texas property code and obviously what's right. But there's a little thing there where tenants want to get as much as they can with the new owner.
Right. The other thing to take into consideration as well is that as we're renovating units and raising rents, these units, any maintenance issues that would come up are getting solved in the renovations, right? So with 2000 and 2006, we just did a full remodel. They're not going to have many, if any, maintenance requests.
Yeah, and like another thing, like everyone has different strategies. We're kind of on the growth mentality. Like we want to have a balance of like getting more properties and fixing this up to where it needs to be. But correct me if I'm wrong, I don't think we're getting brand new ACs, brand new water heater, like a bunch of brand new things, which would essentially give us like little to no maintenance.
Right.
But that can be a good strategy, but we're just trying to have additional capital for more deals.
Yeah, we did get new appliances, but if the AC unit is working, then we're not going to replace it.
Yeah.
All right. So, accounting for insurance, management, vacancy, and maintenance. This is going to leave us with net operating income of $6,710. Then we've got our mortgage payment, which is somewhere around $4,700. Maybe it's like 49.
I think it is, yeah.
I think it's 4911. 4911.
We did you talk about interest only?
A little bit.
So the reason why this is so low is because we negotiated with the owner interest only. So that was the game changer. If we didn't get that interest only, we would probably be breaking even or maybe negative. It's really competitive here in Austin. And so we sold it in the sense of, hey, we're not going to pay this down by the time we pay this off. We're going to owe you the full lump sum. So the owner liked that in that sense. And for us, this is a big part of what made the deal work. I think if we were paying a regular interest rate with principal and interest, I'm pretty sure it would be $6,900, I think, or $6,800, something like that. So that was a game changer to make this deal work. One thing, I'll talk about one real quick lesson learned. We did the mortgage payment due essentially whenever we close.
Well, it was an issue. That's not initially how it was. We just got screwed on it.
Yeah. But I'm saying, just to be honest, me included, we missed it.
Yeah, we missed it, but that's not what we negotiated initially.
Which sucks. I guess we didn't negotiate that, and then we got vacancies and maintenance. So 7 days later?
What happened was we pushed close date back. So with the original close date, the mortgage payment was due a month later. But we pushed close date back, and in the amendment, it did not change the terms of when that original seller.
That's not a huge deal. It actually kind of is, right?
Oh, it's a big deal.
$5,000, maybe 10. depending on when we had the payment. So we missed that. Like we did agree to it, like you said, but we signed the promissory note and closing docs, and we looked at it and it said payments due. So that was out of pocket, right? Because we didn't have the rent at the time.
Mm-hmm.
Yeah, we didn't have any rent coming in, vacancies, and the owner collected the rent. So lesson learned right there. Read the promissory note to check your interest rate, if it's fixed, if it's variable, the first payment, the maturity date, all those things. Double check those at closing.
Yep. So after we raise all rents and account for all operating expenses, then after our mortgage, our net income will be somewhere around $1,800, give or take, every single month. And we're right here at about the 1% rule. $12,000 a month in rents, purchase price of $1,150,000. Plus, we are putting money into the units, so that's putting our cost basis up to about 1.2 million. And we're getting 1% in rents. And here's how it plays out.
1% in Austin, Texas. If you've ever done one of these, let us know. I hadn't run across these in 4 or 5 years. I mean, these are hard to do. The lucky thing that we got was we bought it below value. This was an off-market deal. One of our agents, Chris Sweeney, brought the opportunity to us. We're lucky to have that. And he said, hey, Matt and Alex can help me get it done. And the key was we got in the room with the owner and we negotiated this, the closing date, multiple terms, which turned out to really benefit us. And, you know, this is what people don't understand. I feel like, unfortunately, is there's usually more going on than just listing the property. This guy that owned these is a broker, right? And he didn't list them on the MLS for a particular reason. He also knew that we were going to close and we were going to get the deal done. He didn't have to do multiple showings. I would assume maybe 90% of buyers would have had a much different issue with the tornado, and they might not have closed the deal. We kind of looked past that pretty quickly. So there's a lot of value in thinking outside the box and not just being a listing agent or thinking, hey, you have to list your property to get the highest dollar. This could be true in some cases, but there's more things going on. It's a lot of variables that come into play. So broker sold it to us directly. Yep, no. And Alex has been hustling to get this property into the condition that it is. It is a ton of work he can speak on that, but materials, timeframes, and if he didn't do that, I mean, he was there like 5-6 days in a row, and if we didn't do that, it would be like a month or two has gone by, and then this is, $5 grand, 10 grand, 15 grand, 20 grand, 25. And so that's really important, is to have the plan and to jump on it quickly, especially when you're dealing with vacancies. The other thing which we're really excited about is the rent potential is way higher, hopefully, if we can achieve this, which is the goal, than we expected. The owner was renting these for like $1,300.
Yeah, 11, 13.
$1,300. And so he was like, guys, I think we could get 15.
Mm-hmm.
Like, okay, man, like we'll try. And then we're like, hey, market's hot in Austin. Values have been going up for a long time on the prices, but the rents have not. And we think now they're going to catch up, and there's a big demand. I've got a house in Round Rock West that we were leasing it for $1,700, and we just got $2,500. And so, like, that's a big deal, right? I mean, that will cover the taxes, so I have to come out of pocket. So that's a little tip if you're in Austin. The rental market might be higher than you think. There's also this like underground market in a sense of people that aren't able to get approved for certain type of properties. Like maybe they have an eviction or they have like pit bulls or whatever it may be. We're a little bit more open to working with these people than maybe certain management companies or certain investors. But you can get a premium. Obviously, there's a little bit more risk that's involved there. But if you're open to allowing pets and working with people in certain situations, you can get a premium on the rent. So I've always found that, and also I enjoy it. Obviously, making more money is great, but like people have a hard time finding a place, and I tend to be a risky person, and I'll allow my risk and kind of believing in people and betting on people that they're going to be able to get in there and pay rent. Andrew, we got it on one of your properties where that guy probably wouldn't have been able to get approved at a lot of properties. And it's been a little challenging. Like he's been late here and there, but he's still making his payments. Like hopefully you feel like it's all good. I mean, he's kind of lived up to what he said. And I tend to have a heart for that. Obviously there's more money, but try to get people in situations where they couldn't always get in these houses. If you guys have any comments on this, opinions, questions, teach us something. We love it. Like we want to like give all this value as much as we can, but we're by no means saying we know everything. So there's so many variables and aspects of this business and little things that you can do that can really benefit and increase your business and how you operate. And so we're constantly trying to learn as much as we can. Alex is always like high level macro stuff with everything going on with interest rates, and the world is changing quickly. He's looking at that kind of stuff. We're lucky to be plugged in with agents that are boots on the ground that are like, bringing us stuff, and we're seeing the market in a sense a little bit faster than what might show up on the MLS. So you got to use all that to your advantage. But, anytime you guys have any thoughts, opinions, let us know. Like we want to lay it all out as much as we can.
Did someone ask about refi? We can't refi for 3 years. There's a 3-year balloon, and there's a prepayment penalty of 10% if we refi or sell within the 3 years. So we're going to be keeping this note in place. And then after the 3 years is up, we'll refi, sell, or possibly renegotiate some seller financing.
Yeah, that's true. Yeah, so that was the whole point of like where we can really thrive is to get in the room and be direct with the owner, because we're able to present a lot of options. And the 3-year prepayment penalty was fine for us. We got a good term. Like every factor was negotiated here. For the owner, he hits a certain age or a certain tax bracket. I can't remember exactly, where he doesn't want to be paid off early because he'll get taxed on it a little bit higher. So we actually talked to him about paying it off early, and he said he might be open to that, and he'd probably just waive that 10% potentially. So we're gonna have that conversation in a year or two. Things change. That's a huge component of everything we're doing. Things change for people quickly. What do we owe? I think we had $300,000 down payment. So like
No, 125.
125 total.
Yeah.
Nice. So $1 million is like what we'll be giving him a big chunk of. Maybe he needs that in 2 years or 6 months, right? So that's one piece of advice is somebody may say they don't want to sell or they don't want to buy anything new, but things can change quickly, especially in this market where rates are changing and people are losing, like me personally, losing tons of money on stocks. And if you're losing a lot of money on stocks, maybe you'll capture some money from your house and double down on the stocks and buy when they're down. Who knows? But everyone has different situations.
Just so everybody knows too, on the equity that we walked into and the loan to value, I think a lot of people, especially now that rates are rising and things are changing in the economy, people get a little bit nervous about being over leveraged, or we get a lot of comments about, when the recession hits or this or that, like, you guys are screwed. But one thing to remember, and what we always do, is we never buy at market value, right? So we didn't market value on these. The comps are about 515 each. That was a few weeks ago. That's going to continue to change. But that would put the market value of these duplexes at about $1,545,000. We bought them for $1,150,000. So instantly we walked into about $395,000 worth of equity. With our down payment of $125,000, puts our total equity in the properties at about $520,000, and that puts us at about a 66% loan to value. So we are, at about 66% loan to value currently in these properties, which is not bad. It's a 34% down payment essentially on the properties compared to the price. So to be underwater prices would have to decrease 34% here in Austin, Texas for duplexes for us to be underwater on these properties with what we owe. However, rents are increasing like Matt was talking about. So one thing that really helped us out here is the fact that now the rental market is catching up to everything else. So initially thought we were going to get 1,500, give or take. We thought they were 20% below market rents, but they're actually at about 50% below market rents.
Yeah.
So raising these up and being able to structure this to where we will have net income even after our mortgage. We've got good net operating income on these properties, good LTV, really makes this an amazing deal.
What was our interest rate? 5.5%? Something like that.
Something like
Yeah.
that.
The beautiful thing about real estate and leverage, what I want to point out, remind me our down payment, 115?
25.
125. All right. So put 125,000 down, right? So if this goes up 10% in a year, appreciation, say that happens, we're getting 10% of this number, 1.5. What is that? 150. So we technically doubled our money. 125, we did more than double. 125, we made 150. That's crazy. I don't think people understand that. It's like the appreciation isn't on our down payment, it's on the
Total value.
And it's on paper, right? So, hey, say what you want about that. But like, that's how we're thinking, and that's the game we're playing with a long-term vision. And we're not trying to sell this regardless of if it goes up 20%. We're probably not selling it. Maybe if it went up 1,000, we would. I don't know. But we believe in long-term holds in Austin, Texas. This guy I was talking to yesterday calls it, it's a hedge fund term, but like, I'm a deep value investor. And I was like, what is that? He said, well, it's just buying significantly below value. I was like, oh, great. I'm one of those too. So that's like what we're all about is buying value on the front end, pretty significantly lower than what we believe a conservative number is. So this is me. I'll establish what do I think that this property would sell for right now, multiple offers on the market, not what's the highest price I'd get. So I establish the baseline, and then I'm trying to be 20, 30% below that. And it always starts with the story. Like the most important thing I want to know when a deal comes my way is and if it's, hey, someone saw it, I'm not interested. Just off the bat, just to conserve time. Story on why this opportunity is here. And then if you can dive in and present a lot of options, that's where you can find value if you understand how to, what I call pull the levers of interest rate, closing date, down payment, all the different factors that come to get involved. And when you're getting into owner financing, that's when it gets really fun because there's a lot of things to negotiate. When it's just a standard transaction, it's more like price and closing date. The rest of it's kind of set by the lender. So that's where we can really thrive is a direct meeting with the owner.
That you're talking about value and appreciation. So, our down payment of 125, we get to capitalize on the appreciation, not on that 125, but on the appreciation of the total value, which is $1,545,000. So it's a substantial return on the appreciation, however it is on paper, like Matt's talking about, but so is depreciation. So another important part about holding real estate and what we're going to be able to do with these duplexes is we'll go in and get cost segregation studies done on them for the 2022 year. And we'll be able to depreciate the value of the improvements of the property to decrease. Well, we're going to take big losses on paper. Again, just on paper.
On paper, apparently.
We're going to take big losses on paper to offset taxes that we'll have to pay otherwise. So this is the real beauty in owning real estate is and holding on to it for the long term. This is why we really don't like flipping deals that much, and we try and hold every single thing that we can, is you get to capitalize on everything, right? So we get to capitalize on cash flow. Even after our debt service, operating expenses, when we get rents up to where they need to be, we'll be looking at about $1,800, give or take, a month in cash flow on these duplexes, which is great. Here in Austin, if you're breaking even on your debt and operating expenses, you're doing great. But here we should be producing some cash flow. And it's the 1% rule. You also get to capitalize on the appreciation like we've been talking about. The real estate is going to continue to appreciate. The market has cycles. However, we're going to be able to capture that appreciation, especially in a market here like Austin, Texas, for a long time. So our value is going to continue to go up, and we can depreciate the asset, the improvement on the land, to offset taxes that we would pay in other areas. And so we're going to be able to take even though we're making $1,800 a month and we're gaining, if it increases 10% appreciation a year, this year we'd gain $150,000 on paper. We're actually going to take a pretty big loss on paper for depreciating the asset through taxes.
It's beautiful. I mean, there's so many benefits, and I don't know any other industry like this. And it's proven, unfortunately, right? I'm in the stock market. A lot of people are. It's proven now more than ever. Like, people have been like wanting to get into, Amazon or Tesla or whatever, and they're great companies, and I wish the best for them, and I think they're gonna be great. But like, we're not having any conversations about, dude, we got a 30% drop in our real estate. Like, we don't even come close to talking about that. And that's potential. That could happen. But the key is buying below value. And every market is a little bit different. One day, I feel like we're going to start buying properties somewhere else and solely focus on cash flow. Like, I'm dreaming of that, right? But we're so zoned in here, and there is such a good opportunity in Austin that we're just focused here. And we could turn these into Airbnbs. It'd be a little bit more expensive.
We could condo them out.
Yeah, we could condo them out and sell them or flip them. We have a lot of exit strategies because we bought it right. If we paid top dollar and we had, which is what a lot of people are kind of forced to do here, if you're not really diving deeper, is we buy this, have a $8,000 mortgage payment, and we have to Airbnb to make the deal make sense. Or we have to just accept the fact that we're going to lose money every month and truly bet on the appreciation. So we're getting the hybrid of both. We're looking for other markets to invest in with our fund. If anyone here listening is in another market and you agree with how we operate, and use the same strategy, but then go cash flow significantly with that, looking for more agents and brokers to come work with us, to team up with us. And we just want to continue to add as much value as we can. We got the construction company here. We're going to work on managing these properties. We're building the brokerage. We are saying, forget the conventional wisdom and what other brokerages are telling you on what you can and can't do and should and shouldn't do. We love it that people are knocking us for our strategy. It's great. We love being in that position. But we're solely focused on teaching the agents and the agents that want to get more out of real estate how to do that. And we want to grow with them. And that's like a huge component of what's led to our success. Is we couldn't do this deal if Chris Sweeney didn't find it. So we support Chris. As far as I know, there's very few, if any, brokers that would have done this the way we did it with Chris and promoted that. And so Chris is going to own 33% of this. We've got another deal in East Austin with Chris, and now he's probably a little bit more jacked up to buy more of these. So we're continue to be excited about getting the vision out there that agents are partners, and you don't have to fit the traditional mold. You don't have to be like everybody else, and you can break those barriers to get more for you and your family and to create generational wealth. But the hardest thing is, this is not easy. Like, I made 39 offers yesterday. It takes hardcore commitment and grinding and consistency. But if you're willing to do that, we believe that real estate can be for anybody, and you can get more for yourself. And we really, really want to support and encourage that. And if you have opportunities, bring them our way. Keep hustling, and let's continue to get after it. So thank you guys so much. That's kind of all I got, unless you got anything else.
All good.
But we want to continue to push forward, make a difference, make an impact. And I promise to personally respond to every single comment here. Let us know. We want your opinion. We want your feedback. The more you give us, the more we can help you guys out. So let us know any kind of questions or things that you need. We love you guys.
See y'all next Thursday at 9 live.
And make sure to subscribe to the YouTube channel and share it with your friends. It would mean the world to us. We're trying desperately to get the message out that you can get more out of real estate and you don't have to come in here and call your sphere. So let's get after it. Subscribe on YouTube, Instagram, TikTok, Facebook Reels. Check us out. We're putting out as much content as we can, and reach out, guys. Hope you have a blessed